All right, good evening, guys. Weekend strategy podcast for Tortoise Capital. Swing trading tonight. I want to start off just with one catch-up trade from yesterday. Didn't have time for that one last night. So this is a standard intraday play on in a volatile market when we're trying to emphasize intraday volatility only, no overnight risk. We start off with a morning move that is large. That lets us know that this one is in play. Then at the bottom of the sell-off, we're getting the RL10 to roll over. It's in the spring, as you can see. Crosses the baby dragon, crosses the dragon. The PSAR flips. So we get our standard supported spring crossing. So we buy here. Our risk box. And as always, the first risk box means a lot, because if that initial sell-off and current low of the day holds, then that becomes an important marker for the kind of day we're going to have. And then we're just going to also notice that the VWAP is rolling down, and that this then becomes our target for a simple VWAP magnet kind of a trade, where we're looking for price to return back to the VWAP. And we know that's going to decay a little bit. So that there will be a slight downward slope to that price target as we go through life here. All right, so let's go ahead and mark up our stop. So we have our stop in the usual place down here at the PSAR. And then off we go. PSAR starting to rise. We get through the RL270. That's a pretty good place to get to no lose plus dinner for two somewhere in here and just lock that in. So we're not going to lose any money on that trade. Now we're noticing that the Z3 pinch is now starting to expand. That's a good thing. And now the PSAR, or I'm sorry, the VWAP target has now moved down to here. So you can see that's decaying a little bit. Price is running to go catch up to that price. That's what we mean by the VWAP magnet. Now, here we're starting we get the first sign of satisfaction and contentment, if you will. We had price running up with the Z3, and then we get this bar closes with a lower high and a lower low. So that would make this bar 1, bar 2. Now we're entitled to, if we want to, just go ahead and put a stop right there and decide to take a 1, 2, 3 exit. And what we're doing with a 1, 2, 3 exit would be to protect against a retracement all the way back to the Bollinger Band mean, which is still slowly rising. So prices run away from that turning point. We want to lock that in. But it holds and then fails. Now it made a new high, got beyond the Z2, couldn't quite close the gap all the way to the VWAP, even though it took out this high. And then we get a 1, 2, 3. So the 1, 2, 3 exit, if we execute that properly, would have been here. My exit was about a C exit, I took it halfway between the PSAR and the Bollinger Band mean. I took it right where the RL270 cruised in. So that's not an especially good exit. I gave back way too much on that. However, that's a pretty good first trade to get started. Compare that to our risk box. So we net the green at a risk of the yellow, and that works out to be about 1, 2. That's about a 2R win right there. Okay. So that's the end of that trade. Next up, we get a price has now rotated back down to the, let me expand this just a little bit. It's getting a little clustered in here. All right, so now we've got price came down, tested the Bollinger Band main, reversed, the RL10 bottomed out here, crossed the baby dragon, and now we get a 1, 2, 3, and it's crossing the dragon. So that's a standard kata 2 reentry. And what I'm going to do on my stop on this one is anchor the risk box right at the bottom of the RL10. And so I'm taking a slightly less risk than I am on the original trade. My target is still going to be to the upside, to the VWAP, although I know it has to get through. It has to get through this price level, which is the peak of the RL10. So I know that it has to get above that. Now, if it doesn't get above that level and then starts to fail, then I will just cut on this trade. So an ordinary routine trade that succeeds should get through the VWAP. It should look something like this, should get through that and then keep going. And somewhere around on there is where I'd look to add a second position, because now it's above the VWAP. It's pushing above the Z3 pinch. That's the positive scenario that I've set up for this one, right? So let's see what we get. Comes right up to the Z3 line now has pinched, and price gets right to the edge of the VWAP. So this is time to fish or cut bait. By this time, my stop should be at least here, because I don't want to give back more than that. I've already locked in, and by so doing, whoops, I will have locked in this much of a gain. So like right now, we'll just put that right there, which is about another 2R. Now this one runs up to the Z3 excursion. You know, it comes all the way up into here. It's been riding the Z3 Bollinger Band and then starts to decay. So now we get a 1, 2, 3. A 1, 2, 3 exit should have been taken here when it gets below, when it drops below the low of the second bar, right? I didn't get that one either. So again, a pretty poor exiting. And I get essentially the PSAR stop. Okay. So we take that exit right in there. So that's about another 2R. And now we notice that we are pretty much fully fair valued here, because prices pulled back to the VWAP. And it's been one really good leg up, a short pullback, a second really good leg up. Now, if there's a third leg up, we'd expect it to be approximately that same size. So you can see it's starting to hold right here. at the Bollinger Band mean once again. So that's still bullish behavior. So if this were to hold, then we would expect this to do something like that. Okay. So I should be ready to start re-entering again, somewhere around the top of the dragon, because now I'm buying it on the correct side of the VWAP. As long as I'm buying a rising price before it's crossed the VWAP, I'm on the value side of the play. And then by the same token, if this Bollinger Band mean fails, I can actually think about tactical trading to the downside there, or getting short at the Bollinger Band -1 or -2. And in each case, I'm, looking for a target to get back, somewhere around in here. I'd be looking for something like a return to somewhere down here if I get that short side trade. Then by the same token, on the upside, if this thing breaks above the RL10 and the PSAR, then that's going to be a very good sign. So what I'm doing here is kind of framing my trade to look something like that. That the yellow zone is the indecision, and that I'm looking for a breakout, an unsurprising move from out of this yellow zone where the price currently is, would be something like that. Either one of those is equally likely. Okay. Now there's I'm leaning towards the upside on this one because we've already had two nice legs up after that first big downward move. So we get the breakout above the VWAP. It doesn't follow through, and we take a fractional loss when it pulls back to the PSAR. So let's take a look at that one again. All right, so we got an entry here as it crossed the VWAP. It ran up, but couldn't even get to the Z2, and then started to roll over. So you get a 1, 2, 3 crossing the VWAP, pull the trigger, get filled at the Bollinger Band mean. So there's a fractional loss on that one. Those previous price levels still remain in play. This was a missed opportunity on the short side. Now what I'm noticing here is the beginning. So this was, there was a possibility of taking that trade, just didn't get it. Now I'm noticing that the RL10 is rolling over, and we could now start thinking about framing this trade this way, see where the PSAR is going to probably flip, like right about there. And then I'd be willing to be short, probably just this one right here. Just bring this across. We should be ready to get short something like that. Now notice how there's kind of a standard risk size box in here. Yeah. So this is normal behavior. Should have been short, should have been short, should have been short, wasn't, should have really been short. Horrible trading on my part. Had the box framed, just didn't take it. So what are you going to do? The problem on this one was that there was a good one here. And then when that failed, there's another collapsing dragon there. And that's my favorite pattern. And then a standard play on this one should have been short here when it crossed below my red line, or here when it breaks down below, and possibly second position in here. So any one of those three entries could have or should have been taken. And then a standard 1, 2, 3 cover would have been either here, or I would settle for that one. So there was another missed opportunity. And so the same move that earned us 4 on the upside offered 4 on the downside and just didn't take the trades, didn't have the will, or didn't see the pattern. It may have been had a long side bias because we're trading US steel, and I had a long side view of that. So how good is your vision? How good is your anticipation and expectation? It's a case of where the expectation got in the way of my vision. All right, so now when I'm looking at this, I'm looking at the possibility of a RL10 rolling over. If this thing continues, now that it's through the VWAP, I can see a move back to the VWAP and the RL270 and the Z3 extension. That's a reasonable trade. So we take this, I look at this, this can either be a supported spring crossing because now you have the spring, winter, and it reverses into the spring. Or I could also talk myself into thinking this is a kata 2 because you have a dragon low here and a higher low here. So in either case, whether you take that as a kata 2, in which case we're thinking about this being this kind of a trade, just taking that same last leg and bringing it over to here and say, well, it's got to at least get through the VWAP, and it could very well get to the top of the stack. And if it gets above the Z3 excursions, that thing could be a great trade. So we go ahead and take that one with our standard risk box at the PSAR flip. And this thing's moving in our direction. I finally get a second position in. Starting to decay. It pulls back to the Bollinger Band mean. Actually, it doesn't even pull back, really. All it's doing is just, it's stalling in this kind of sideways, this sideways price action here. And the Bollinger Band mean, which had been flowing downward, got flat and then moved up. So we just take a standard managerial exit on 2 positions, and we net this on the first trade, which is about 3R. And then this one nets about that much, which is a little, maybe a half an R. So that's about 3.5 R. Oh, and there's more. So after that, we get a quick re-entry because it fails to fail further. We get a Z3 pinch and it crosses above the dragon again. So you just hold your nose and buy it, and then the thing just off it goes. And I should have had a second position in here or here, just too slow. I got ticked out on this one. It came down and hit my PSAR stop, so I'm out right there. And then was too slow to get back in, and I missed the recovery move. But we did manage to get that one, which was about 1, 2. That's about another 3R. So we're right around 10R right now, with not very efficient or perfect clean trading. Yeah, so we missed that one should have paid off. Now you can see this thing rolling over, getting into a sideways channel. And I think we called it a day there. So that was enough. So that's what 10R on Friday looked like in US Steel. I give myself about a C+ on technique. Well, no, I'd say maybe a B plus on the technique is actually applied, but about a C on seizing the opportunities that were there. So not particularly sharp, although the execution was pretty good. It didn't stick around too long. Like on this one, it didn't stick around too long. I was not really mentally prepared for the short side trade, but we did get the long side trade, and I'm pleased about the re-entry here. So there's 10R. All right, let's take a look at some Ken H trade frames. Let me know if you had any questions on that one in the chat. Yeah, that's the only one I had going on, Ken. I was monkeying around. The girls were getting ready to travel to California. And so while they were packing, I was just kind of standing by and waiting for them in the kitchen. And so it was a little noisy. So I was trading one for fun. All right, let's see. Okay, so this is Coca-Cola, and Ken is using the weekly, daily, hourly. And I'm noticing on the weekly, there's been a nice upward move, and then this breakout up was pretty strong, because you had this recovery, couldn't quite close the gap, but it had a higher low, and this time it hesitated and then blew through it. So that's really a strong sign that like 57.50 is strong support because it was such strong resistance. So that's like right about here, 50 on the daily. Whoops. Sorry about that. Yeah, so 57.50 on the daily is like it's like right here. Yeah, so you can see this was the last couple times it got there, it fell hard. This time it got through, came back and tested. So that might have been a place right in here, or certainly right here, 58.75 or 58. We might have really gotten more on that one. But if you come over and take a look now at the hourly, so here's the 57.50 support level. And now you notice that it bottoms out, it crosses the dragon here. This one barely even budges. This would have been an amazing entry. This is a pretty good entry, especially if you're using the risk box all the way down here. This would have given you about that risk box is about 0.75. If you're using this one though, if you wait to see this and then it recovers, you'd be entitled to use it like this. And that would have been about a 50-cent risk box. Now, this one is a nice, another Kata 2, and you might have picked about a 40 or 50-cent risk box. But it's really close to where the hesitation was. But now I want you to notice that this resistance is now this support. So when it breaks through, that's a really strong sign. And you can see that it was starting to consolidate because the Bollinger Band mean is coming down. And then this is the beginning of a new price expansion and new volatility of the upside, because you can see the Bollinger Band begin to expand as the trend continues. So I really like this support level here. What I like about this one is he's not waiting to see it break out above the high. He just needs to see this thing start to continue and off it goes. And the reason is when you look back over here, There's no resistance. This is all free and clear. It has cleared that. It has cleared this little spike. And the last big resistance was way back there. So this thing, with just a little encouragement, is ready to continue to go. So I like the fact that he wants to get in early and that he's only going to need about a 0.25 risk box. That makes this one really nicely done. I wouldn't get short until it broke below 58.75. So I'm not in a hurry to get short here. I don't know if I like that. I do like getting short here. That's good. So nice frame. Oh yeah. Yeah. Bollinger's was that the interview that he did with Jeff? He did a really nice job on that. That was really an amazing video. You know, when one of your heroes says, yeah, those ideas are pretty good, it makes you feel pretty good. All right, so here's uranium weekly, daily, hourly. We got a nice, again, the resistance level is now the support level, and it's already had one nice move to 105 from 70. So that's almost a 40% bump to the upside. And the weekly has already turned once, although it did come back, but now it's holding again at a strong support around 72. And on the hourly, you can see the support at 72. So there's not much open risk on this one. And we've got the PSAR flip already. So again, as soon as this thing gets above that trailing second PSAR dot, up it goes. First target would be the Bollinger Band mean. Then I would say the far side of the river, peak of the RL10. That feels like a little resistance there around, and the round number of 80. Then the peak of the dragon, peak of the RL10. So you have a really nice price ladder of there's probably 3, 4, 5, 6, 7, probably potential of 8 to the upside in various stages of liftoff. If I was going to do, I'd say maybe here I'd add another one right there. I think I'd wait till having 2R in hand and it breaks out of the river before I get that second position. I'd actually have to 1, 2, 3 in hand before I let it break out and go. This thing, when it goes though, it goes fast. So if you're committed to putting a second position in, I'd have that in the market. And who knows, that this is not all that liquid. That might draw some attention and get some people trying to gun your entry. And the downside is just easy to see. You don't even have to try hard on that one. If that thing fails, it's coming back to 55, which is about a 30% sell-off. Too easy. All right, next one up is XOP. The weekly is trying to hold some support here, but we've got a series of lower lows each time. So this one, you got to be ready to come down and reward this on the short side. So that's the obvious short. When that collapses, that means this collapses. And even if you just get that first move down, which was like a head fake, and then it did this. So you got to be mindful that even if you get that thing moving down, this could just as easily go back up to 99. That's how volatile this thing is. So I might have my execution stop here. If I got short there, I might have an execution right there. But I like this as the RLXD to the upside. No sense waiting longer than that, because you have to enter there in order to make this a feasible trade of 2 scoops to the upside. So that one looks good, both directions. Here's Alcoa. So Alcoa's in a nice position. This was one of the few that held on pretty well on Friday. It held this little consolidation zone. We'd like it to do the same thing here, consolidate. So let's see it break out. That's the size of the move. So this thing could get to 64 on the upside. And again, once it gets above here, it's pretty much free and clear. There's no resistance overhead. And then the breakdown is easy to see. It comes back to here. And I think that's about where I'd put a second position. It's just around 56. Here's US Steel. This is a tactical trader only. There was no way I was holding this thing over tonight, but you just notice the up, the down, the up, the down, the partial up. So it's halfway up the stack. So yeah, I mean, I think you could, if it gets above like 24, it will have cleared those three. And now you're into this box. And the first real sign of resistance would be about 25.25. So you're looking at $1.25 of upside move reasonably, and only about 30 cents of risk. So that gives you a 4-to-1 reward to risk ratio, aiming for 25.25. And then the breakdown, you should be able to see 22.50 easily, but more likely you would see this. You would see this price level down here, 22.25. So that's another $1.25 to the downside. So that's also 4-to-1. So it does not get any clearer than this as a critical state. Is it going long? Is it going short? I don't know. I don't care. It's 4-to-1 in either direction. As long as you don't believe in it, then you can trade that one effectively with about a 30-cent risk, which is more than 1% on a $23 stock. So don't lose your mind. Routine. Oh, we already saw it. Yeah, we already saw US Steel, sorry. And here's lithium. It's had two pullbacks already to here and to here, but higher highs and higher lows. So there's another, if it's parallel, it looks like it's getting to, 96 from 84. So yeah, could it get to 96? Sure, it could. Is there a couple spots along the way down? Yeah, this one, these little resistance levels were support levels that broke, and now it finally held here. The only good news here is that it's a higher low, so it's kind of a kata too. But the size of that sell-off makes me look at this as an SSC. So I love the little doji here. I like getting long there or short there. You tell me. I'm just going to follow price. And there's enough tentative buying pressure to reward those guys. But if these little second mice fail, bam, down it goes. So great multi-directional trade on that one. Good find. All right, here we have real estate. We talked about this one last night. This has just been the go-to long-term position in BMR and weekly, monthly trading. Strong support. This was just a little bit of profit taking, and it was immediately seen as a buy on dip, and it went crashing through the previous resistance. This is still so free and clear above all this other stuff. that you are justified in having a nice tight stop of about $1, and the upside is forever. And the short side trade, if you take it, comes back to like 112, which is about $4. So if you're risking one, you could try it. That's about a 4-to-1 reward to risk. If that starts collapsing, my spider sense is that there's other things that would be failing more that might be easier to short. So if this starts failing, I would be looking at where's it going to start to rebound so I can get back in and buy another dip. That's my thinking on real estate. Next up, Brazil. So here's just an opportunity, waiting to happen. It had been striving. It broke above the previous resistance. Got, a third leg in, made it all the way up to 41. Couldn't hold at the Dragon, couldn't hold at the Bollinger Band mean, couldn't hold at the river, couldn't hold at Z2, got all the way down to Z3, has started to fail again, and just put in a week worth of exhausted, not satisfaction, but just plain exhaustion from all the guys who made their money on that short side. Is this the turning point? I don't know, but it's been trying to build some support here. And here's that first piece, and it got through that on Friday. And so I could reward that one. And the first target at 31 is more than enough. That's a $3 gain for a 50-cent risk. That's 6-to-1 just to see it do what it's already done. And that's not even talking about the next legs up. So I like that one a lot. And it's easy to see why you want to be short on that one, because then if this breaks, you want a double scoop on that going to the downside. Next up, Walgreens. And this has been, along with the healthcare, pretty nice stealth trade on this little tactical rebound right here. There's your supported spring crossing. Here's your Kata 2. It held and then broke back above. That's your Kata 2 entry. So if you're playing that one, you're happy with this. You're happy that last week it got above and held above 51.75. So this is still in play to the upside. And that sell-off was not much. It held at 52, and you're going to get long at 52.20. So you're risking 20 cents. And you could see it get to 54 pretty easily. And then target, 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 target on the way down. If that fails, you want to be short there. Second position, third position if you dare. And with a target around 50. All right, here's XLP. So this is the consumer staples spider. And it's been a defensive play for people that want equity exposure, but the safety of consumer staples during a pandemic. So it's held pretty strong support over here around 75. Pretty strong support. That's this one here. And a second support right there. So I like this support level here. And that's ready to go. Sure. This is going to really take the direction that the big market takes. So if the S&P is up, this should go up. But even if the S&P is down, but in a calm manner, then this could still go up on Monday and Tuesday when, as people want exposure going into January. So I like this one. I think if this starts breaking down, I think there's better things to target to the downside, but it's a pretty compelling story. I mean, you wouldn't expect a lot of gamesmanship on that one. So that's $2.50 to the downside and maybe 50-cent risk. So this is a 5-to-1 short side. And then the upside's just easy to see. That one's growing on me. Our last one is gold. Some evidence of some defensive plays happening here. We just look at the edges of the dragon. Has held. And now it's halfway back up the stack. You can see that that's a pretty strong resistance level. So it makes a great target. So you're looking at about $3 of upside against $1 of risk. So that's 3-to-1. And then to the downside, I would say this bend in the dragon, that's $4. So maybe 4-to-1 downside. So it's right in the middle of that critical state, ready to break in either direction. I like it. This makes me think the upside is still strong. You got that strong kata 2 support, and this is the first time you're going to see it get any resistance. So great set of symbols, Ken H. I think I'm going to start either a weekend podcast for the larger world. I may just start extracting some of these, getting our brand out there. Keep your privacy protected and stuff, but I think more people need to understand what we're doing. All right, guys, have a good rest of your New Year's Day, and we'll be ready for them on Monday. Regular schedule for tomorrow. Tomorrow's Sunday. Excellent. Let's take another day off. And I'll see you tomorrow at 8:30. Take good care.